All right, ladies and gentlemen, I got your watch list coming into June 12th, and we have a lot to talk about. I apologize for the dramatic title, but prove me wrong, and if I am wrong, we are going to get the great rally, which is following the great cuckening, which you guys saw today. So if you guys have been following along with the watch list, you saw what happened today. We saw the GC, we saw the stalling, we saw the oil volatility, and even now, after hours oil drop, this is going to be the key for tomorrow. And I'm going to talk about a very specific thing and situation that we are in that could cause the market to come down or create volatility. Now, I am very biased on this because I'm starting to turn bearish and I'm starting to scale in on puts. So, like I said, if I could get proved wrong, I understand that this push-pull, this cat dog will create some velocity. And, I even cashed out of an Amazon call vertical that helped me, even though I got a bunch of puts. So I'm keeping my options open, but at the end of the day, I am starting to turn a little bit bearish here. So oil is important, but it goes back to this theory of where I think we are. And now oil's doing this, and literally it's starting to play out almost exactly like it. You guys could see. But now starting here, oil will start to stay the same, but it's not going to affect the market. So again, this is where we pointed out, last week and kind of, this whole process of, and again, it was related to oil. We've now had these exact dates. It's almost moving to a T at this point. So if all goes well, tomorrow will be this big day that we saw December 6th or December 4th. And then the next day is coming into December 6th, and then it puts us here. But now this puts us in a unique situation, which I'm going to talk about, that is related to the keys for tomorrow. Because you see it comes down here, and again, this whole time, oil stayed the same, and then eventually December 17th, 18th, 19th, it starts to drop. But coincidentally, the Fed meeting was the 18th, 19th, and that is when the markets capitulated for, another day or two, very, very bad, and then came back up. So this is going to really affect how we are moving forward from here. So I'm going to get into the keys, but before I do that, do not forget the most important thing. You need to post your watch list below. Any of the stocks you're watching, drop a thumbs up on the video and make sure you are live because, we're there because we're live 30 minutes before open Monday through Friday, youtube.com/the stock market. I'm a little bit sick here, but we are still in the game, and I hope you guys are ready and smart and understand this volatility opportunity. Keep your money and save it. This gives us an opportunity to push it to the wall. If you're not familiar with that, come ask on stream, or best of yet, just go through all the YouTube videos we have talking about it. And first, link in the description for the stream alerts and the boot camp. You don't want to miss anything. You need your stream alerts insurance if you are going to miss anything this week. And again, this cuckening, but enough of that shameless self-promotion and propaganda. We need to get to your keys for tomorrow. I didn't make it as big because it's very professional and very important right now. The market is ready to decouple but not slide, so we're still in a flash cuck zone. So again, I think we could look like this. So I'm scaled in, and we're going to go over some of the plays I made, and that's what I want to do is put exposure. However, I still think it could play a little bit differently. Again, I want to be wrong. If it plays exactly like this, I will be very, very surprised. However, that doesn't mean that I'm not going to take advantage of it, but at the same time, I'm kind of waiting, and really I say we're in a flash cuck zone, and I'm going to skip here because the cuck is confusing, my friends. I want you to really understand that, and today is a very great example, seeing what happened, seeing we only closed literally 0.01% on the NASDAQ, 0.05% on the Dow, and 0.03% on the S&P. This was still pretty big moves, and this is a great example of the cuck because the cuck is confusing because it crawls, it's slow moves, and when it's coming down, these slow moves, it's at any moment you could just pop up and things are gonna, it could bounce, and that's why it's a cuck, because it could go and then bounce and then you're screwed over, but then it comes back down and then it bounces, but it's such a slow moving, thing like right here, and then it could any moment, and then pop and no bounce, and then any moment it drops, but then it'll come back here. But before you know it, you could either shed a lot of points, and it's this slow, what I'll call the frog boiling, but this isn't the frog you guys want if we're looking to play on those options. So that's what makes this all so difficult, and that's what I kind of mean by it's ready to decouple but not slide. And what I mean by that too is we're going to decouple from stuff like oil again. So pretty much how I expect it, either oil's going to move or the market's going to move, and I'm saying one or the other, and I'm expecting differences from what we saw in December and November because we already did see differences the first time we saw the moves in oil. So again, I'm not expecting it to be a carbon copy, but I'm expecting, big candles, and that's what I'm saying here is that there'll be big candles in oil, but the market will probably, it'll move a little bit off of it, but not as much, or vice versa. The market will move very big. And again, if that happens, that will lead to more November-ish, and that would be more of a decline where we see the market move and oil doesn't move as much. But again, I'm waiting for bigger swings in oil to represent even smaller moves in the stock market. That would be different, but if it's vice versa, I figured I'd get that in writing to make it a little bit easier to consume for you. If the opposite happens, that would be more reflective of December. But I'm still awaiting bombshell news, whether it be oil, trade, China. We saw Kudlow in China trying to pump stuff. It didn't really work today. And again, that could even happen where the oil and everything will move, but off of news and stuff, but the market could still do its own thing, and that is going to be telling us. And now we are coming into the Fed. We'll come back to what I'm saying with the surprising levels, but looking at the Fed, that took place on the 18th or 19th. Right now, the market is predicting a rate cut for July, not this next meeting that we have in a week. But what I'm trying to say is that where we're at here today, the market could either force Powell's hand, or the market could cuck all the way up until this meeting, and Powell, and it could drop on Powell's words. So coming back here, let me show you kind of visually what I mean by that. Is that here again, this is where we were reflecting in December. We start coming down, but December 17th, this is December 18th, 19th, this is the Fed, and we start to come down. And again, there's already Fed speeches and people talking, the market already doing bad from all this, the trade war, yada, yada, yada. So that would be all of the negative stuff with, weighing down. And what I'm saying is the two options is if the market forces it, one, the bond rates are going to keep doing something. And I'm going to show you guys a little trick, and I'm going to make a bigger video on it. So what I'm saying coming into this week, the Fed meeting is literally like 7 days from now. This next trading week, the market could come down, and if any news or anything comes and develops, it could force the Fed to do something, and that's what the market was really doing here. It wasn't liking what the Powell and everything was saying, and then Powell didn't react, and he reacted not what the market liked, and the market sold off further. So then that's where I'm saying either the market could force Powell, either with both what the bonds are saying and with if the stocks drop, or this could lead to the great cuckening where we could stall out here or even maybe hold up here for the next 7 days, and then something said at this Fed meeting next week is kind of what gives the impetus to either a bounce or a drop. And then that's what leads now to the Fed rate hike. And this is what I was saying. If this is the main thing I wanted to talk about with the video, watch the bond rates, because if this one thing happens, this could crash the market, and that is the 2-year and the 10-year inverting, because that is yet to happen. We've seen the 3-month invert with the 10-year, but that is the official yield curve inversion most economists refer to, is when the 2 and the 10-year invert. But what's important about that is saw today that the 3-month was going higher, even though these rates stayed the same, which further inverts the curve. But what could happen is the 2-year can go up while the 10-year goes down. So again, like you're seeing here, the 30-year is going down while these are going up. You're seeing different things, and that is pretty much the bond market saying something. And here is that little trick, because this is, paired with the 2 and the 10-year inverting. The real, I guess, secret to all this is what will cause the Fed to cut rates. It has to do with these predictions. Now, these are based upon the Fed future prices. So based on the prices of the bonds, you've heard me talk about this. This is what the bond market predicts for the rate hike or cut. So here for this meeting, June 19th, next week, 75% are expecting it to stay in this range. But now you go to July 31st, the next meeting, 22% expect it to stay at the same range, but 60% believe it to come down a quarter, while 17%, almost just as many that think it's going to be the same, are expecting even another quarter point cut. So not just a quarter point cut, but a full half a basis point. And now yesterday, that was at 66%, so it's changed surprisingly dramatically here. And, the probabilities are going up, which is a good sign because of bonds. But this is what I want to show you. If this number stays at 60, and pretty much the market is decided at 60% on one of these rates, that will happen. And that's happened, I think, for about the last 30 years. And I've talked about this in a video last time this happened, but pretty much the market and the Fed usually, or typically, and again, it doesn't have to happen, but in the last 30 years it has, they don't want to upset the market. So if the market price is 60-40, there's a majority somewhere, they don't want to surprise them. So as long as this stays above 60% coming into that July meeting. And again, it could change every single day. That's going to indicate the rate cut. And if it does, go watch my video on the stock market coming down. I think we will see a lot of volatility following that. So it's a wonderful time to be alive, folks. A wonderful time to be interested in bonds and everything going on. So I hope your head is in the game. You better contribute in the chat. You better post your watch list and get ready. But let's talk about the plays. Right off the bat, we're going to be going into Amazon, but mainly I want to relate it to antitrust and Google. I picked up another play with some great timing, but the key here is there was words said by Assistant Attorney General, it's like Mackin Delarim, I think that's his name, but they had the conference today, or the hearing before Congress, and they outlined kind of what stuff they want to look at. Now, I wanted to do this research. I didn't have time to, get it ready for all of you guys right now, but this is going to be very important. But we've already seen the reaction from the antitrust. We've seen stocks like Google bounce, but the thing that made me really want to look at Google is when you pull up like Facebook, they weren't dropping at close there. Even Amazon, a lot of them, when Google started to drop, they actually popped. And it looks like Amazon kind of got they might not be regulated as much, but I would look into what he said. And if we could see more developments, or be careful of more, as more news comes out, investors might start to price that in as that goes on. And then they also said potential probe and the jurisdiction. So again, Amazon is in a different jurisdiction than Google, and the guy who has Google handles Apple, and I think those are really the more serious ones. And at the end of the day, Google really has the most to lose in this, and you could even look at what happened with the Google and antitrust in the EU. But I like that. We got that play. I'm opening legs, so I'm buying puts pretty much. I'm just buying puts by themselves. And I'm going to wait. I'm hoping they come down to sell premium and use those as insurance. So it's a little risky, but we also picked up a Google put spread yesterday. I told you guys about Netflix yesterday. I built a position. I grabbed I think next week or 2 week out put on it. Those went up today, pretty decent amount. And again, it looks very deceiving. When you're looking at it, it looks like Netflix only moved $1 today, but in reality, I think we got puts up here. We caught about a $6 move, or an $8 move, $6 even from close. So the contracts went up. And when you really bring it up on a few-day chart, at Monday, this thing is at 366 down to 350. That's a $16 move in 2 days. And like I was saying, Netflix, it's lagging a little bit, compared to the peers in tech. But also at the same time, it's a big mover. So if the velocity gets there, it also looks a little sketchy on the daily. That could be good. Another play I made today that also showed great moves with the contracts. It was weird. It was T-Mobile. And if you guys go look at the option chain, if you played, you'll notice the spreads are crazy because they got a lot of people sued regarding the deal. A lot of the states, I think it was 12 or so. But the spreads are crazy all day, and they stayed there. I think it's hinting at something. And we got these, I think we got the 73s. I got these at like 20 cents, I think. We got one of these super cheap. But I'm going to keep my eye out for that. Sprint also moved as well. Next up, I'm going to look at drip. Again, I'm expecting stuff with oil, and I got time on these, and I'm starting to set August and September put spreads. So again, I'm thinking we could get a move now, but like I just said, what could happen with the Fed, and if everything gets pushed, and depending on how this plays out, if we even get a surprise cut in July, or a not surprise cut that's getting telegraphed now, and the market comes down, I want to even get set up, honestly, just get time on everything. And how I'm using my strategy to sell premium, I need to make sure I got time. But I got July and August drip. Again, I think I got August on drip, or September, but throughout all the plays, I did scale in XLF yesterday. We got drip today, but I did a call spread on these. So watch drip. I think it's a good one for the oil. I'm not really a big fan of the oil bear ones, but out of all of them, I do like drip. I think it's a pretty interesting one. And the best part is it has cheap shares. So depending on what I want to do with this, I might just buy shares, and I could even sell the premium on it. So I'm definitely going to consider that option because I do like drip. But then I also played Yang, and now this is the Chinese ETF, and I like it because it really does look a lot like November, December. Again, putting this on the chart with what I'm expecting. So if this is that December 4th and 6th, again, China had a pretty big recovery. I think Yang could come down a little bit. It's very illiquid and hard to play, so be careful. But that's why I did the butterfly. I think it was like a $20 or $30 max risk on there. And then, speaking of which, I will go here at the end when we get to the option chain. I'm going to go over the Lululemon play for earnings because I have another one here. I'd watch FedEx. We're going to go over the options I want to show you there. But lastly, Beyond. I lost $1,000 on that option today, and that's above the other money we lost on it. However, I'm still confident in it. I think just in general, pushing this to the wall. We did make a call play today. We bought a Beyond Weekly. I spent 70 cents on it. I'm just the fact, this stock is moving $40 in a day, $30 here and there. It's creating volatility in a market where the market's already volatile in general. It's just great here, again, as we get pushed things to the wall and so on and so forth. It is going to have opportunities. That's why I want to get in there. But again, I got even November calls to utilize, I'm taking advantage of the implied volatility. I want to at least get insurance. I could even buy more now. I think I should, to continuously protect myself here and be able to sell more premium. And so I think I am going to do that. I'm going to buy probably a lot more calls tomorrow with the notion that they go up, and then eventually I'll be able to use those as insurance when they go up and I could secure the gains. But there's that. And I don't know if you guys saw it too. I sold out of a data call for $22. If you guys remember, we straddled that literally a month ago on May 3rd. So shout out to Stream Alerts. We put that one on there. Remember, that was actually the data play that was on the Stream Alerts. I don't think people liked the video or something, but we went over this on the watch list. Somebody could go pull that up for me. We ended up making like $100-$200 and it came down. But after the merger, I was up on this yesterday and I didn't even check this account. I didn't even look at the portfolio balance. And I was up $2,200 on it. So I took it. We spent like $100 on it. That was pretty cool. But I might even watch data and we'll see, because CRM and all those mergers are still at play. But watch Beyond. I think it's there. It's opportunity to make money. Honestly, it is degenerate. It's going to be degenerate type plays. There's going to be opportunity to make a lot and lose a lot. It's going to be fast, slow pace. Like I'm saying, don't get your hopes up. Don't try to predict Beyond. All you have to understand, there's cycles. It's going to move big in the morning. It's going to have a period to move. It's going to do nothing. It might pop and have a big move in the middle of the day, and then it's finally just going to make one big move at the end of the day. That's it. So you get 2 to 3 shots to play it every single day, and then the rest is just waiting till the next day. So don't get your hopes up and be all jumpy about it. Next, watch transports. I think this might be the next one I want to play, but I'm going to keep my eye on that. But even related to it, I'm going to watch Zoom, because they're kind of like Beyond. So, they kind of look similar. It looks a little stronger, but I think if this starts to move, that could be a little bit better. And it looks just a little bit, a lot chiller. It doesn't look it looks like the more tame version, but again, different share structure and everything. Watch TLT. It's starting to do that little hangout here, and it could start to go up a little bit. So we got those butterflies on it. I'm going to be waiting to see how that plays out. And lastly, XLF and financials. Watch for financials and transports to come down and possibly even lead if we see values in the other stocks start to hold up in anything around that nature. So there's that. And then we are going to have Lululemon tomorrow. So we'll work on the Tastyworks platform instead. But here's that Lulu play. This is what I wanted to show you guys if you try to do it, but it looks a lot visually pleasing on the Tastyworks platform. But essentially, if you do a play on Lululemon, and I still have to show you guys the FedEx, but if you do any of these weeklies and you want to do a butterfly, all you have to do is just do 3 right next to each other. It's a butterfly without any spaces. You could essentially, based on how the prices and spreads are, you could do that almost anywhere on the chain. And again, check yourself. These numbers can change depending on the prices. But what I saw today, if you did a butterfly like that, you could have spent around $10, and the max gain would have been around, I think, $400 if it goes to your price. But the key is, even if you bought, you could have buy these 3, and it would be the same $12 if you bought these 3 down here. The key to the butterfly is you need to get the middle strike. So this is the middle strike. So I got a 182 call, I bought a 182.50 call, sold 2 185 calls, and then I bought a 187. Here, I got the cost so you could see it, but I bought one of these contracts for $450. I sold this for $752. And then I bought this for $310. So add that. That's what? So that's $764. I bought $752. That's literally a $12 difference. So that's how much I spent, $12. And now I'm pretty much saying, because the expected move on Lululemon is about $9, I'm saying by June 14th, why do I make money, or where do I make the most money, is if it closes at 185. Why? Because if it closes at 185, nobody will have a premium. If it's not above 185, no one will pay for this contract. So we sold premium on it. We would have made $750. We would have got to keep that premium, and we wouldn't have taken a loss. Then we would have got the 182.50. We have one of those contracts. So if it went up to 185, that would have $2.50 intrinsic value. So that would be $1,000, $52 or $1,002. But then we would lose on this contract because it would be out of the money. So it'd be like $700 and something dollars. So that's if it closes at 185. So as you see, it's $12 and we can make like 700. Again, it will change if it closes a little bit above or below depending on if you lose on this contract. But if it closes above 187, we lose the $12. If it closes below 182, we lose the $12. So if it closes above 185 and in between here, we will still lose on that. So the whole idea, that's what I said, they're all going to cost the same. So you could do this butterfly for, and pretty much, hey, you spend $12. If you pick the price that it's going to end up at Friday, you will make $700. It's simple as that. If you're wrong on the price, you're going to lose. So if you want to pick the price, just make sure the middle contract on the butterfly is the price you think Lululemon will close at by Friday. Simple as that. So that's a good risk-reward play. Paper trade with that. Use it as a learning experience. And lastly, my final contract to share with you guys today because I love you. Look, I'm just feeding you all these plays, man. So you guys better be contributing, sourcing that info in the chat, post your watch list. But FedEx, watch the puts, the weeklies. These are going to be my push it to the wall candidate. Why? Because they went from 9 and 10 cents to 60 today. We got these at the beginning of the week and we're just getting clobbered on them, as you can see. So I was like, dang, they're really cheap now. But some of these kind of held their value. So coming into this week, and again with transports and the banks and small caps being on our list, I'm going to want to watch those. So push those to the wall, watch and if they do end up cheap, we will see what happens. But that's pretty much it, guys. Drop your thumbs up on the video, get your watch list, get your head in the game, and I hope you're ready for tomorrow. Let's go!